What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you guys are having a wonderful Monday. The market is back and ready to rock tomorrow, and we will be ready to take those opportunities to make some money and to have another great week. So, today's focus, guys, I really want to just take a step back and dig into the fibs. I keep preaching the same message every day, but I know there's a lot of new people coming in and out. So, I want to just go ahead and just reiterate some of the concepts and the teachings. So if you're ready, my friends, let's step into the war zone. All right. So who's here first? Let's give some shout outs. Doc, what's going on? Araso, what's going on? Todd, Trading Wars Army, what's going on? Chris Ain, Ramon, Trading Wars Army, good to see you. Edwin, Trading Wars Army, what's going on? AV, Trading Wars Army, what's going on, brother? Chris, welcome to the army, brother. Nandy, good to see you. Good to see you. All right. We got a full house. Okay. So what we're going to do here, guys, is I'm going to go to my website right now, and I'm going to go to my table of contents on the fibs. And I just want to walk you through all of the concepts. Okay. So this is the easiest way for me to show you how I divide the Fibonacci into. So a Fibonacci is pretty much these three legs are what you'll be looking at for day trading. These three. So you have your morning, your afternoon, and your opposing leg. So if you can understand these three legs, you're going to be good to go. So that's what I'm going to teach you today. So the morning, the afternoon, and the opposing. Okay. So basically, what it all means is this: in the morning, you're going to have either a push down like this, or you're going to have a push up. So we can go either way in the morning, right? And this is generally going to take, pretty much 30 minutes. So between 15 to 30 minutes, sometimes an hour, you're going to see a clear leg. Like here is an example, clear leg, right? So once you have this leg, guys, so this would be the bullish situation. This would be the bearish. So let's make this red. So this could be bearish. And then let's make this one green to be bullish. And the whole concept here, guys, is essentially we are looking for this move to pull back and then to continue. Okay, that's it. That's what the fib is doing. It's allowing us to be able to get in on a pullback and trade the same direction of the first leg. So sometimes you're going to go ahead and make a new high, but sometimes you won't get all the way there. Sometimes you'll come to maybe halfway there and then you'll come back down. So that's basically the situation that can happen, right? And then if we do the bear is the same thing. We're trying to come back here, take a little pullback, and then either make a new low or come down a little bit and push back up. So this is what the fibs are doing. And the whole point of this, so if you were to take a fib and just stack it from low to high, is you're trying to get in on the pullback, which is this golden zone. So 50 to the 786 fib. What it's essentially saying is this: if we move $10, you're trying to get in when it comes back to $5. Okay? You're trying to come back when it's at $5, you're trying to come back when it's at a deal. So you're not going to buy it when it's 10. You're going to wait for it to come back. Hit me with a 1 if that makes sense. And I see some people are saying the stream is a little bit blurry. Just hit the refresh for me, guys, real quick. And let's see if we're all right. I might have to change my internet setup. Let me see. Yes, I think I'm on the wrong internet here. All right. Give me 1 second, okay? Hang on there with me, okay? Give me 1 second. All right, I hope we're good here. All right, I'm back. Everything's good. I apologize about that, guys. I had my hotspot on and I forgot to turn it off. So I was on hotspot there. So hopefully we're all clear and we're ready to go. Right? So the basic principles that we trade with the Fibonacci, the basic concept is this: if we go up $10, you want to buy it at 5. You want to buy it at 6. You want to buy it at $4. You want to buy it at a deal. Okay. If we go down $10, you want to short it when it's coming back up to $7, $8. Okay. $6. You'd never want to be the person that's chasing at the high or chasing at the low. And the reason that we do that we don't chase, is because if we chase and we are wrong on the trade, then we're going to lose a lot of money. But if we take the pullback and we're wrong, we won't lose nearly as much. So with proper Fibonacci trading, you should only need to win three, 1 in 3 trades, 1 in 4 trades. If you do that, 1 in 3, 1 in 4, and you can still walk away with a profit. And that's why I love to teach this way of trading, because let's be honest, guys, nobody is 100% accurate when trading. But the difference between a Fibonacci trader and a breakout trader is when you trade the fibs, if you get it right, you're going to make a lot more money. Okay, because you're getting it on the way back for the deal. You're getting it at a 50% deal, at a 618, 61.8% deal, 78.6% deal. Those are all percentages. All right. So your morning leg essentially happens, within the first half an hour. And then your afternoon leg is exactly the same pattern, but it takes the full day to develop around 11, 11:30, 12, around lunchtime. When you start to get chopped, you start to go sideways. That's when you have the afternoon leg. And the opposing leg is an advanced topic. So I'm not going to go there yet, but let's see how far we get in this video. I might need to make a separate video on the opposing leg. All right, just hit me with a 10 if you're following me on the basics so far. Okay. Yes, we're going to do lots of examples, and I'm going to show you real money. So don't worry. Strap in your seatbelts. All right. So what I'm going to do now is I'm going to start showing you some of our live trades that we were able to take last week. And we're going to start off with Monday. Okay. So we're going to start off with Monday, and I'm just going to focus on the fibs. I take, opening range breakouts. I do fractal trades, but let's just focus on the fibs today, because I think this will probably be one of the most powerful things you guys can learn. All right. So here we go. So I'm replaying the market. Here is the first candle on Monday. Okay. So you can trade the first candle, but that's a totally different strategy. That's an opening range breakout. So what we do here is we wait for about 3 candles. Okay. Once we have a direction. So you could see here, 3 candles came in. We have a direction. We moved lower. Very clear. We try to go higher. It didn't last. And then we go lower. So once this comes in here, guys, once that new low, so here's your new low comes in, now you can draw your fib. So there's your high, there's your low. Okay. There's your high, there's your low. And then we mark up the golden zone, which is from the 50 to the 786. So all we're saying here, guys, is we're pushing down, we're pulling back up into the zone, and that's where you're going to hit it, right there, in the zone. You're not going to take the breakdown here. You're not going to chase here. You're not going to chase here. You're not going to be the person to buy the puts when they're already extremely expensive. You're going to have the discipline to come back, let it come back to you. When it comes back to you into the golden zone, that's when you buy your puts. Okay. So it could be any time frame. The time frame doesn't matter. You just need to see a clear direction. So there's your direction. Okay. So let me go ahead now. So I'll show you the profits on this trade and I'll walk you through. So first thing is, so we wait, we come into the zone right there. Okay. So there's 2 ways to trade when we come into the zone. The first way is you just be extremely aggressive, and just as soon as it touches the level, you just short. So you don't wait for anything. The second option here is to wait for a candlestick pattern. So you could see here that we did also have an inverted hammer, right? Which actually, if I fast forward here a little bit, it also becomes a little bit of this Nirvana pattern right here. Okay. So if you wait for candlestick confirmation, the only downside is sometimes you get in late to the party, right? So if you waited for this whole hammer to close, then you're getting in down here. Whereas if you just hit it right away on the 618 or the 786, anywhere in the golden zone with the stop loss at the top for protection, if you were just hit it there, you would have got a better risk to reward, right? And then all we're doing here, guys, is you see these lines below the golden zone. So here, this is your target zone. So all of these are targets. Okay, all of these are targets, and you can go all the way down. So this is how you make money, where you get in the zone. So, and then let's put your stop loss right here. So let's make this red. right? So this is your risk. So you're risking this much to potentially make all of this. So when you draw it up like this, you could see, well, that's a positive risk to reward. My green is my profit is a lot more than my potential loss. And when you're trading options, especially if you're able to get in on the fibs, you're going to get the options for a cheaper price. Okay. So now let me go ahead and show you the profits on that trade, and then I'll take a little bit more time here and go into more detail on how to execute it. And particularly, we like to use it with we like to trade this with futures contracts if you have a very, very small account, because sometimes you won't even be able to afford the options. Okay. So I'm going here to my younger brother's Twitter. So he does the small account challenge because he has a small account. And I want him to learn how to trade the right way before we grow his capital. So this is June 13th. So this is the same trade setup. Okay. So I'm going to read this to you because I want you to pay attention here. And this is how we actually execute using futures contracts. Okay. So basically what we do here is once we touch a 618 and we touch a 786, we have orders waiting. So when we start, once we have that leg drawn like this, once it starts coming back up, you have your orders waiting. So that's what makes it really nice, is that you let the market come to you. You dictate how you want the market, how you want the trade to be. So you say, all right, if you're going to come up higher, I'm going to buy puts. I'm going to short. I'm going to take futures. If you come to me, but you don't chase. And that's pretty much what I'm trying to teach you guys here, is the moment you start chasing, you're already down profits. How many times have you chased a short or chased a long with option contracts, or in general with anything, and you're automatically starting red? Hit me with a 2 if you've ever been in that experience. So have you been in that experience where you felt late to the party, right? You jump right in and you get in right away and you're already down 15%. So that's because you're chasing. But if you have your order waiting, you dictate the market. It comes to you. This is how a lot of algorithms and market makers trade. They have a lot of size. So when you have a lot of size, you don't chase. You have your orders waiting. The market comes to you to fill your orders. And that's how you always get a pristine risk to reward. Okay. So the profits on this trade, let me go back here. Where were we? Right here. Okay. So you enter on the 618, you enter on the 786, your stop at the corner to protect you, basically the last swing high. And on this trade right here, so you can follow along. So we shorted 2 contracts first on the 618 and then 3 contracts on the 786. And we took them back down here so what we like to do for our targets is the same thing I just showed you guys, using these extensions as targets. And this particular trade made $805.55. This is a small account. So this was only risking $200. Okay. So risking $200 to make 800, guys. This is the right way to trade, meaning that you're trying to get double, triple, 4 times your money. If you're missing, if you're trading, let's say $200 risk and you're making $50, then you're going to lose in the long run, because even if you're perfect all week long and you have one bad day, it's going to wipe out all of your gains. But if you do this way instead, if you have one good day and the rest of the days you break even, you have losers, it doesn't matter, because your risk to reward is so strong, you could even lose the rest of the week and still make money. And that's what we're trying to focus on, is every single day we're just trying to look on a weekly and a monthly basis and walk away with some kind of profit. If we can walk away with some profit, you'll see how powerful it is over time. You can compound that, and it does wonders for your psychology. And then all of a sudden you were trading with $200 and now you're trading with $400 in risk, then 500. And now all of a sudden these gains become double, triple. So you start off making 800, then you're making 16, then you're making 24. Everything is a mathematical formula. So as you grow, okay, as you grow, so does your account. All right. Okay. So this was a trade here. And then let me just show you the Discord. So a lot of people, they come to me and they say, Rich, my biggest problem is I can't draw the fibs in real time. I have struggles. I don't understand. So that's why I draw them for you guys. Okay. So let me go back to the date. So this was the 13th of June, and I'll just show you a sample so you understand. And, it's all about getting better. Okay. It's all about getting better. So here we go. So let me go to the 13th and I'll show you. So there was the profit. So I'll explain this to you. Okay. So 13th right here, right here. Okay. So first thing right here, guys, exactly what I just showed you there. So these are the first three candles. So if you look here, that's these three candles. The only difference is we use futures, but you can use options. You can use anything, right? As long as you are using good risk to reward, that's what matters. So there's your first three candles down, and then you can see these little things here are our risk to reward tools. They're in Tradingview. So if you don't want to use these boxes, right? I like showing you the boxes because it's a little bit more visual. But all you have to do is go here, short position, put it on the 618, put your stop loss right here, and then you move this up and down. That shows you your profitability. So here's 2 times your money, 3 times is a little bit more down, 1 times your money. So this is a good tool that we use. Okay. So from there, we have it. You could say up against the 50. So 618 filled short, 786 filled short. So this is a double trouble strategy that we use. It's a double fit. So meaning we short on both levels, the 618 and the 786. And I found that over time, that's a little bit better because once you come to the 618 and the 786, look at this risk to reward. Okay. So you could see we get filled on the 786 here. Our stop loss is right here. So we have a very quick protection. So if it doesn't work, if it turns around right here, it breaks through, we're out. But look at the risk to reward. As I go down, look how this risk to reward moves. Look how it moves. 5 times, 6 times, 7 times, 8 times your money because you have such a nice tight stop. And I'll show you guys again. So boom, 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 great rejection here. So that was this in real time. And then the 382, that's our partial target. And then we just crushed it. Okay. So there we go. So another thing you can do, and I talk about this in my book, is set conditional option orders. So you can set an order that says, when 380.81 on SPY breaks, buy me the 380 puts. So I also talk about that in my book. It's a little bit more advanced. I don't recommend it for everyone. If you want to fully automate this, you can set conditional orders. Say, when SPY breaks 381.26, buy me the 380 puts. You can program that. So literally what you can do is you can just program it, you can walk away. All right. And that's another powerful way of trading. So the only problem is sometimes you might get a bad fill, but that's why I always recommend trading things like SPY, indexes, indices, whatever you want to call them, that have a lot of volume. So the spread is going to be tight. You don't want to be doing this, conditional orders on illiquid stocks because the spread might be like $5 apart, $10 apart. So as soon as you get in, you're going to be down. But always remember this, you could always do it with shares. And there's nothing wrong with trading shares. People have been trading shares forever. It's a little bit, out of the modern way of trading because people prefer options, but it's there. Okay. So you could still make good money trading shares. And I do that all the time. Okay. All right. So there you go. So here is your first morning leg. We push down, we pull back in to the golden zone right there. And what we're looking to do right here when we pull into the golden zone is we're looking to make a new low, right? And then here we go. Why is this thing blocking me? So there we go. There's your new low, right? So that's beautiful. So that's what you call a morning leg. So it's basically first 15, 20 minutes. You have a high and low. We pull back into the range. We roll over. Okay. That's the morning leg. It's completed. Then we reload and we look for the afternoon leg. Okay. So hit me with the 7 if you guys understand me so far. Hit me with the 7. So that's the morning leg. Okay. So always try to have whatever you're trading. So like with futures, it's pretty straightforward because it's basically like trading shares, right? Essentially, it's like just a level, right? If you trade options, you have to factor in all of the Greeks, which is still fine. Because the way that I think about it and the way that I want you to think about it is this. When you trade a morning leg option contract, you're probably risking about 25%. Okay, 25%. Let's assume that you're not doing 0 days to expire. So let's say you're doing Friday. Okay, so this is not 0 days to expire. 0 days to expire, you can make a lot more money. But let's not talk about that. Let's keep it simple. So let's say you're trading this with the puts, okay, SPY puts. So you have to assume that when you get in up here, if it fails, you probably lose 25%. So when you're going to take profits, what you want to do is you want to make at least 25% minimum. That's why in my tweets, I always say scale out above 25% minimum. Okay, so you don't have to go for home run plays. You could be like, I'm risking 25% to make 30, 40, 50%. That's fine. So it's going to be hard for you to like in real time calculate, oh, well, if it goes here, I'm going to lose this much, this much. Keep that in your head, a rough estimate about 25%. So when you're going for the profits, you want at least 25%. Okay. Does that make sense? If you have any trouble with the options, then don't worry about it. It's not, you can trade futures with a small account without PDT. And I've talked about that many times. It's something that people don't get. They don't understand it, right? And it's also has better tax implications. The tax rate is lower when you trade futures. So think about it like this. So I did speak to somebody about this when I first started trading futures. Think about it like this. So someone in the tax code, working with these high level officials, whoever they are, decided that, for futures, we're going to have a lower tax rate than trading shares or trading options, the gains. It's going to be taxed at a lower rate. And you wonder why. Why would somebody go into the Tax Act and create that? So think about that for a second. And then you also need to understand that futures is one of the most liquid, highly liquid, traded 24/7 around all the different markets in the world. It is one of the highest, most liquid, most volume traded instrument in the world. So now when you add all those things together, guys, you have to understand that there's some players that are playing this game and they created their own loops. They have a better tax bracket. They do all these things, right? The downside is margin. And that's how everything is, right? There's going to be a good side and a bad side. And I always say, if you're going to do futures, never hold them overnight. Because when you hold it overnight, you're going to get into potential margin problems. The margin is double of what it is intraday. Always have a stop loss and know your risk. And if you calculate that, if you do it properly, like what I'm trying to show you guys here, as an example on a small account, right? So you see in and out within 30 minutes. That's the right way to do that, because with a small account, if you end up holding it overnight, you might get margin called. Okay, especially if you have a very small account. All right. So the other thing is to use the MES, which is the micro futures contracts, because the micro future contracts are even less margin required. If you use a full contract, which is ES or NQ, you use those, they require a lot of margin. I'm talking like 10K in your account, capital wise. But if you're doing micros, you only need like 1,000, 1,500. Depends on the broker. Some brokers are a lot less. Some are a little bit higher. But it's a good tool, but you need to know how to use it. Okay. So, I mean, I've been there. I've gotten myself into bad situations. That's why I'm telling you. I've been through there. All right. So we have the morning leg developed. Now what do we do? So the next thing is the afternoon leg. So the afternoon leg, my friends, that comes in around 11, 11:30, 12. What you do is, and this might be the easiest for new traders, is you just let the market do its thing. You let it go into the lunch hours where the volume dies up. So you could see right here, guys, we let this play out a little bit. All right, so right around here, this is going into 11. Okay, and you could see we had 2 legs down. We had a push, another push. Usually with 2 legs, there's going to be some chop. There's going to be, like, it doesn't usually just go down forever. Sometimes it does. That's called a trend day. But a lot of the times, it will not do that. It'll start chopping. So what we do now is we say, all right, well, what was the move in the afternoon, right? And like, that's where I'm getting at right here. So let me just get there. So this is the afternoon leg Fibonacci retracement. So what is the move in the afternoon? Well, we can clearly see it went down, right? And if you can't clearly see if it went up or down, then don't use the fib, because that means we're just chopping. If we're just going like this, up it like back and forth, that's not a good time to use the fib. You want a clear direction because you're trying to trade off of percentages, algorithms. You're trying to follow that style. So we have that push down. So what you do now is you take your fib, you put it on the high to the low, same thing like this. And now you're looking for the same golden zone, but this is just a bigger picture look because you're looking at the full day's range. So there's your golden zone. Okay. And then look, so a lot of people ask me, Rich, what do I do if we make a new low? You just keep moving your anchor, keep moving it down until we retrace. So here we go. Move it down again. Okay. Here we go. Move it down again. So keep moving it down until we start retracing. There you start retracing now. So now you have this range. And you're saying, so you just adjust your golden zone right here. I want to get into 50 to the 786. I want to get in there. So we come in, boom. Okay. So there's your first 50% rejection. And it's amazing to watch this because a lot of the times the algorithm is going to scalp. It's going to see, you see how the algorithm works? It takes it from the 50 back down just from level to level because it's a high precision level, right? You just take it, it touches it one time, bam, it comes back down. If you look at the 1 minute chart, you can even see it even better, right? So there's your 1 minute chart. As soon as we touch that 50%, there's an algorithm sitting there, takes it back down. So you don't know if the algorithm wants to flush it, right? Like if they want to push it all the way down or they're just going to scalp. So that's why you protect yourself. You get in, you move your stops, you take profits, right? That's my style. That's how I like to do it. You can do it however you feel comfortable. You can go for home runs. You can just go for scalps, whatever you feel comfortable with, right? So here we go. Pop back up again to the 50. There's your 618. Rejection again. See that? So literally level by level, we're coming in, we're tagging it, we're rejecting. Okay, then we pop up again to the 618. A little bit more of a rejection, rejection, rejection. Look at all these wicks. Those wicks are showing you there's algos trying. They're trying, they're trying, and trying. And eventually we come up to the 786, push in a little bit higher, and there is the high right there. Okay, so sometimes it's going to take some time for it to play out, right? You could see it took some time. You take a little, sometimes depending on how you manage this trade, right? You either going to scalp it down or you're going to sit through this. That's why the stop loss is always at the high to protect you. There's your stop loss, right? And sometimes you're going to take some heat, but as long as you're playing it right, when you get these kind of moves back down, your risk to reward is going to be so good, right? Like you could see, look at all this move down for the risk that you had, that you only need to hit that once or twice in the week to be able to walk away, right? With some profits. So just to show you guys again, I just want to reiterate that, it's not hindsight for us. There's our profit on the morning leg, and then we draw the afternoon leg. So the same chart that I'm showing you right now, this one right here, we draw this in real time for everybody and just say, here's our golden zone. So we're all aware of what we're going to do. All right. So hit me with an 11 if that makes sense. I didn't expect this to go for 30 minutes, but that's the morning and the afternoon leg. So now let me just show you some examples of when it's not going to work and how you protect yourself, right? Because it's not always going to be that clean. When we have a clean day like this, when it's a clean day like this, you're going to make your whole week essentially in one day. You're going to make so much money that you're going to be protected. But there's going to be days where it's not going to work. You're going to get chopped out. So let me show you that too, because I want to show you it's not like the reason the strategy works is because when it works, you make a lot of money. You understand what I'm saying? But when you lose, you have protection. Okay. All right. So here's an example of a morning leg. We push up, we push down here. Okay. So this is very similar. We take the fib from the high to the low like this, and then we're looking in the golden zone. So the golden right there, 50 to 786, put that in yellow. Okay. There we go. So we pop up. You could see, let's go to the 1 minute. We'll see this in detail. So you could see as soon as we came to the 618, we had a little bit of rejection. There's the algorithm stepping in, right? You get a nice little push down right there, and then we reverse back up. Okay, so sometimes you're not going to get that clean, okay, it's going to break a new low and it's going to crash. Sometimes you're just going to get a little bit of this. Sometimes you're not even going to get this. Okay, sometimes it's just going to keep going. So this is an example of, if you're able to take profits on these lines that I have, you'll be okay. But if you want to play for a home run, sometimes you're going to get stopped out. There's the stop right there. You get stopped out. Okay, so then what do you do in this situation? All right, so once that's done, what you can do is you can draw up the other side now. So this is what I call the opposing leg. So the same thing, 50 to 786 right there. Okay, we come into the 786. This one fails too. So now you're getting chopped up, right? You're getting chopped up. That happens, right? But then this is how the fibs work. So let's say you lost this one, and then you come back here for the afternoon leg, right? You have your high to your low right here. You have this big push down, right? You come back into your golden zone right there. Okay, we pop up, reject on the 618, and we retest that low right there, guys. And then we break. You see that? So what this is here, this is a battle between both algorithms trying to figure out who's going to take supremacy. You have the bulls and the bears. That's why it's trading wars. They're always battling. But the power of the fib is such a beautiful thing that you could lose both of these trades and come back and take this trade and still make money. You know what I mean? So you just 1 out of 3 trades, you can still make money. If you're managing your risk, taking your stop losses, taking your targets, that's what my whole point of this is. However, if you were doing this, let's say you were doing this, guys. This is a losing strategy. So I'll show you. So let's say you shorted here, then you bought calls here, and then you shorted here again because you're just looking for, oh, it's going, like when this candle is down here, you're like, it's going to crash. When it's up here, you're like, it's going to go up. If you do that, even if you win the third trade, you're probably still going to be negative on the day. Okay? Hit me with an 8 if that all makes sense. All right? So when we have a beautiful Fibonacci day, you know, those are the days that pay. They pay for the whole month. They pay for sometimes for the whole year. Depends on how much size you went in. And some days, like, you're gonna have to like take a chop. You're gonna take some chop. And I want to be honest with you guys, and I want to show you an example. Let me show you an example. Okay, so let's go here. All right, so this is an example of a full week of trading just one Fibonacci leg. Okay, so here is the small account, TW Dairy. Make sure you guys follow that. All right, so somebody help me keep a track of this. So the week started June 13th. So June 13th plus $805. There's the fibs. There is the broker statement. So 805. Okay, somebody write that down for me, please. Then the next day, which is here, we had minus 79. Okay, so here we go. Same thing. You're trying to get in. So this was the same trade I just showed you. You got stopped out, lost $79. Okay, so 805 minus 79. So let's just say 700 bucks. Okay, so let's say 700 bucks. So now you go into the next day, same thing. You try again on the morning leg. You come back here, you lose 221. Okay, so let's say now we're at $500 in profit. Then you go to the 14th, which is the next day, and then you come back and you hit it for $300. Okay, so what did I say now? Are we like at 800 now? Okay, 805. Thanks, Gringo Local, brother. Thank you. So 805. So let's just say we're at 700, and now let's just say we're at 500 bucks. And then we come back on this day, and then we hit another 300. Here's the same fib play. Okay, right here, 307. And then we're back up to 800. And then you come back again the next day and you lose 300, let's say, back to 500. Okay. And that's your week. Those are your 5 days. So that's realistically how a trading week can play out. And some weeks you're going to hit every day. It's going to be like, oh my God, you're going to hit 800 every single day. But do you guys see? Look, let's support our brother here, Gringo Local. Watch this risk to reward. Look at this. Plus 805, minus 79, minus 221, plus 300. You see that? Notice how the reward is always bigger than the risk. And that's why I tell you guys to do this 100 trade challenge right here. So if you track your trades 100 times, if you start to notice that the loss is actually taking over the winners, meaning when you lose, you're losing 900, 1,000, whatever. So this is an example I was trying to show people. Like, let's say this is you, plus 100, plus 150, plus 200, minus 50, minus 75, plus 500. Then right now you're feeling really good. You get cocky. You go into the next day and lose a grand, right? That can happen. But this is why you have to meticulously track it in order to understand where you're going wrong. And this is what it takes to make money. Making money is not easy. It's not hard. It's not complicated, but it's not easy because it takes work. All right. So there we go. So guys, that was like a little case study that I wanted to show you. That's a small account challenge we're doing. TW Dairy. Make sure you follow him. He's the one that helps me draw the Fibonacci's live in the room every single day and calls out the fibs. So make sure you're following that right there, guys. And hit me with the 7 if you enjoyed this little bit of a case study. Okay. And my message is always this: don't chase, because when you chase, you're probably already going to be down as soon as you get into the position, and it's going to be very hard to come back from that. Let the trade come to you, and also be the person that is tracking your trades and have great risk to reward. So before we go, let me ask you guys this question here. With a 2-to-1 risk to reward, how many trades out of 100 do you need to win? With a 2-to-1 risk to reward, how many trades out of 100 do you need to win? And this is something that I want you guys to remember. With a 2-to-1 risk to reward, you only need to win 34 out of 100 trades in order to make a profit. And that's all we look for, guys. That's all we look for. we just try to stay above 34. We want to be at like 40, 50. Sometimes we get to 60, 70. In a good month, we might be at 80. But on average, we want to stay above 34. That's going to make sure we stay profitable with the 2-to-1. But you could see the way we trade, guys, we go for 4-to-1. Sometimes we go for 3-to-1. We go for bigger ones. So now we don't even need to win 34%. We can win like 28%, 26%, 25%, and still make profit. So understand the math behind it. And I talk about that in depth in my book right here. It's called let me find the section for you guys. In the sample trade plans and actionable setups, you'll see the whole table on risk management. Brokers, so I use interactive brokers only. That's the only one I use, brother. So let's look at this brother right here. So this brother's in my Discord. 57 future trades, 38 wins, 19 losers, 5 winning weeks out of 6. This guy is giving out free game. Mad love. Thank you, brother. Appreciate you. Appreciate you. Appreciate you. All right. Okay. So there we go, guys. Look, if you enjoyed that, if you got some value out of that, right? Check me out at tradingwars.com. Here's the Fibonacci book. This is the bestseller. It comes with 1 month for free in the room. You can trade with us live tomorrow, and you get all of my premium indicators for life and my scanners for life. Okay. So check me out there, tradingwars.com, my friends. Appreciate you. Or you can just sign up directly on the main page if you're interested. Right here, that's a SPY room. And we also have the stock room where we draw the fibs for the stocks as well. All right. So what I want to do to wrap this up is make sure you guys sign up for the lifetime giveaway that I'm doing. So I'm doing a lifetime giveaway because we broke 20,000 subscribers on YouTube. So let me just show you how to do that. All you got to do is you go into Twitter and you search Trading Wars. So you go, I'll pull it up for you guys right now. So Trading Wars lifetime. And I'm going to pull it 1 second. This right here. All right. So here's the tweet for the lifetime giveaway. I'm going to go ahead and link it to you, my friends, right here. Right here. Boom. So I'm trying to get, maybe like 1,000 people to sign up before I do the giveaway. I want to make sure everybody has a chance to enter. I don't want, people to come back and be like, well, I never had a chance. So make sure, guys, you fill out the giveaway. Have a chance there to win the lifetime. The 100 trade challenge, please make sure you're doing this. This is probably the single most thing that will help your trading a lot. I don't care if you trade fibs. I don't care what you trade. You could trade anything you want. But if your risk to reward is not in a good spot, you're not going to make money. Okay. And if you're making money with your strategy, this will help you to see how you can enhance it as well. Okay. Trading Wars FAQ. As always, check this out. I created this with all of your questions as well as the fib levels that I use. What else do we have? Do you guys want to do some scans? Who wants to do some scans right now? You want to do some scans for the market for tomorrow? Who wants to do some scans? Hit me with a 3 if you want to do some scans. We'll look for some nice picks going into tomorrow. And we'll start the party. All right. So let's go ahead here and make these into candles. All right. So first thing we want to always look at, guys, is the blue raindrops. So I'll scan this on the daily. Let's see if we find anything we like. So here we go, JPM, right? Very nice. So we had this blue raindrop not too long ago, and then we had another one. So what the raindrop is showing is that the volume is becoming even within the candle. And that is just another form of consolidation. So we don't have big volume to the upside. We don't have big volume to the downside. We're in the middle of the candle. And that, to me, is a form of indecision. So this is a very hot pick going into tomorrow. What I'm trying to see is a move like this from JPM where we popped up. It can pop down as well. I'm willing to play both sides. So whenever we have consolidation, I'm always looking to play both sides of the coin. So JPM right there. GS, Goldman Sachs, I used to trade this a lot. So we have that blue raindrop outside bar. So this is a double combination pattern. You see we have this little gap above us. So this is also a very, very nice one. Oxy, back in, last year, September, we were killing this one, man, making a lot of money on the options on Oxy. It was going like crazy. So I'm thinking right here, guys, look at this one. This is a nice big drop here. This could be a turning point, also lining up with this previous support back here. All right. So if we break above, long, break below, short, I'll have some triggers for you guys. UPS, very, very nice right here. little bit of a double bottom pattern here. Outside bar, blue raindrop. There's a lot of picks going into tomorrow. Progressive, this is a sleeper pick. This one trades well as well. I've traded this, day traded it, swing traded it. It trades well also. So we have this big consolidation here. Nice blue raindrop similar to this pattern right here. Okay. So those are the raindrops. Let's look at my custom scans. Let's look if there's any holy grails. So we have Twitter right here, guys. Very powerful holy grail. So this one here, let's go ahead and change this to candles. So we have more than a holy grail. We have a Ragnarok. So Ragnarok is inside, outside, inside. All it means is we have a lot of chop, a lot of consolidation. We're getting tight. Option premiums are getting decayed. And then we can go ahead and take a breakout into tomorrow. So the last time we had this kind of chop was near January 2022, where we had a nice little pop here. You could see the last holy grail was here, became a double inside bar and a huge pop up. So Twitter is on watch. Okay. Let's see if we have any nirvanas. So let's see. So nothing. So no stocks here that I personally trade. So I only talk to you guys about the things that I trade because I don't want to make you guys trade random things. All right, guys, look, if you have Trendspider and you want my scans, hit them up at hello@trendspider.com or just DM them or whatever. And just say you want to join the Trading Wars affiliate. You'll get all my scans, all my setups here, guys, so you can scan. All right. Second thing is, if you want to join Trendspider so you can scan like me, use this code TWZ30, 30% off lifetime, any membership that you like. All right. So that's my little partnership with Trendspider. We're planning to do some bigger things in the future. Trendspider is actually trying to integrate different brokers and stuff. And I would love one day to be able to just trade off of these charts so we could do some live trading in real time and just show you guys all that. Yeah. So a lot of people have been asking me about Facebook, Meta. Did they change it now? Meta. A lot of people have been asking me this. Personally, for me, guys, I'm a very simple trader. If I don't have a pattern, I don't trade it. So there's no raindrop, there's no inside bar, there's no outside bar, Nirvana, Holy Grail. I pass because I don't have an edge trading regular candles like these. I don't have an edge doing that. For me, that's just a gamble. If I have a pattern, I have an edge. Okay, so I'm not going to be trading that, but maybe in the next few days, maybe we'll have a pattern that sets up. So I'll keep scanning for you guys every day. All right, there we go, my friends. Thank you very much for being here. If you guys want to do a giveaway right now, hit me with an 8 real quick. We'll do a giveaway to close off the stream and then wrap it up here. I appreciate your time. I don't know how this became 42 minutes long. I don't understand. I thought this was going to be like a 15-minute stream today, but that's what happens when you get carried away with education, right? So let's go ahead here. Let's do a giveaway. So I'm going to go ahead and do a giveaway from the video last night because it blew up. It actually blew up like crazy. So here was the how to trade SPY for a living video we did last night. If you haven't watched this video, please watch it. 2.3K views. Like that's a record for me in less than 24 hours, basically. That's a record. So thank you very much for the support. So we have 43 comments in here. Most of these are my comments, guys. Sometimes there'll be some fake comments like this right here. This is a scammer. So anytime you see WhatsApp, Telegram or stuff, that's not me. So I'm going to go ahead and remove that. But that's good that I show you guys. Don't get caught up in those scams. Okay. You can only check me out at tradingwars.com, guys. That's it. All right. So I'm just going to show you guys because a lot of people, I don't want you guys to get scammed by these crooks. Okay. All right. So here we go. So we have 43 comments. So I'm going to do a random number generator right now. Pull it over here. 1, 2, 43, 3, 2, 1. Let it. Boom. 18. There we go. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Drop a heart. 13, 14, 15, 16, 17, 18. Right here, brother. Ahmed Assam. You're a beast. Thank you so much. Thank you, brother. Appreciate you for leaving a comment. So you're the giveaway winner. DM me on Twitter. We'll get you verified. We'll get you 1 month for free in the room and a book of your choice. Okay. Thank you so much for the support. Antonio, right here, brothers, closing off the stream. Welcome to the Trading Wars Army. Thanks for joining, brother. Let's send Antonio a TW Army Spy VIP. Send me the rockets on your way out, guys. Let's have a great week. Short week. Could be choppy, but we'll still go ahead and do our best. We try to make some money every single week. We have some green. Is better than no green. All right. So we're gonna try our best. All right. So hit me with the rockets on the way out. Don't forget to comment, like, subscribe. If you leave a comment, like you guys see, I do giveaways, so you'll have a chance there to have a giveaway win. All right. Thank you so much, guys. Have a great day, and I will see you again tomorrow. Take care.